Ladies and gentlemen, thank you so very much for tuning in. He predicted the stock market crash, he predicted the quagmire in Europe, and all people can talk about is his crude remark towards Mitch McConnell. Hit subscribe to this channel. We'll get to that later on. He was not referring to a person's background. He was referring to, obviously, business deals, very shady, possibly corrupt business deals that have been widely reported on. But, of course, that's not what media focuses upon. Hit subscribe to this channel, ladies and gentlemen. To my super chat, I cannot thank you enough. If you enjoy these live streams, your super chat support is greatly appreciated. If you want to talk about any issue pertaining to Trump, 2024, midterms, the Durham probe, the fact that the House will certainly go Republican, the Senate very likely will go Republican. I can't see how the Senate will stay Democrat with this absolutely terrible economic downturn, and really not only a stock market crash, an economic freefall. We are descending into chaos in terms of the economy. If Mashed Potato becomes president, the stock market will crash. So if Mashed Potato Brains becomes president, he's basically called it right there. Indy, hello. D'Artagnan, hello. Eric, hello. Todd, hello. Everybody here. Sir Felix, everybody here, hello. To my super chat, D'Artagnan, thank you so very much for starting it off. D'Artagnan Valentino, greatly appreciated. Thank you, sir. YouTube, Trump predicts crash never seen before if Joe wins. Fox Business, July 20th, 2020. NBC News, October 20th, 2020. If Joe is elected, the stock market will crash. NBC News, October 23rd. If Joe is elected, the stock market will crash. Then Rolling Stone, watch Trump's stock market collapse prediction go down in flames. And they live. It's like Rolling Stone, the New York Times, Washington Post, Vanity Fair, Esquire, Cy, hello. Daniel, hello. Kristen, hello. Everyone here, everyone in media, from Rolling Stone, the Washington Post, the New York Times, MSNBC, CNN, The Atlantic, like I said, New Yorker, New York Magazine, they live to just try in the most petulant manner. See Trump. Watch Trump's stock market crash prediction go down in flames. I mean, seriously. Look, it's only November 24th of 2020. So, well, that was weird as you know what, one reporter says. Everything is viewed through the sensibilities of wonderful, morally superior liberal Democrats. Joe's stock market have not crashed as Trump predicted. Forbes, it's like, well, yeah, in 2021, they ignored inflation, went after oil and gas companies, and yeah, the stock market didn't crash. It's hard to say exactly when the market will crash. But you have to give him credit, and I mean, I predicted the same thing, but later than he did. I wrote here, why are Democrats hurtling the United States towards a stock market crash? October 8th, 2021, I wrote about this in The Federalist. I told everyone this would happen. Trump predicted this a year before I did. And then you get Snopes. Did Trump say a stock market would crash if Joe won? And then, of course, it's correct attribution. Okay? Again, what they do with Trump is they take every good thing or every rational thing he says, twists it into, he didn't mean immediately. He didn't it's like the most petulant, he didn't mean immediately. Like the second Trump lost, the markets would crash. He meant during the presidency, we would see an economic downturn we had not seen in decades, or in well over a decade. We're going to see a 2008 moment, unfortunately, ladies and gentlemen. We're going to see a 2008 moment. We have real wages down 4.4% to 5%. We have inflation at 8 to 9%. We have poverty at 14.7% in one estimate. We had poverty at 10.5% in 2019 under Trump. And we had a growing economy. We had inflation at, 2% under Trump. Household median incomes hit a record high, and they didn't need $10 trillion in fiscal and monetary stimulus. So one rebuttal is, well, they were higher under Biden. It's like, well, that was, the economy shrunk eventually in 2022. And you needed $10 trillion in stimulus while the economy was barely performing. And the only reason the economy did okay in 2021 is because people were allowed to work. Barely, but they were allowed to work. After not being allowed to work by Democrats and experts in media. And the morally superior, Kevin Duder, thank you so much to my super chat. I cannot do this without you, ladies and gentlemen. Kevin, thank you. Thank you so much, Kevin. I hope all is well. Hope you're having a great Sunday. It's going to get worse, everybody. This week, Kevin, thank you again. This week, the market is going to absolutely tank. Stock futures down. The stock futures are down. Let's see. If you go to CNN, actually has the easiest. The trusted news and name. They were down 100 plus. NASDAQ is still down, but I mean, the Dow futures mean nothing. It could go up 500, 1,000 points tomorrow. It could go down 500 points again. What we do know is that you have a situation where this thing is collapsing before our very eyes. The past 6 months, we've seen it go from close to 30,000, so 6 months. No, 30, sorry. From 35,000. From 35,000 in May. 35,160 in May. Okay? To 28,725. We're looking at 5,000, no, sorry. 7,000 point drop. May, June, July, August, September. About 6 months. A 7,000 point drop in 6 months, people. Okay? So Trump was right. But all they can focus on still is his personality. Kevin! My man! Kevin Duder, thank you so very much, Kevin. Greatly appreciated. Caroline, hello, and thank you for being a member also. Greatly appreciated. Kevin Duder, thank you so very, very much. I appreciate that, Kevin. Greatly appreciated. Thank you so much. This is going to be a very important week, Kevin, and everybody here. It's going to be a very important week because D'Artagnan, Eric H526, Indy, Cy, everyone here, Lavender Gal, everyone here, Kevin, it's going to be a very important week because this week we'll see if the market stabilizes a bit or it'll tank. It will completely implode, whether it's this week or the week after or the week after that. We are basically skating on thin ice. We are basically a 350-pound NHL skater that wants to be in the NHL. I don't know. We're basically a 350-pound skater on thin ice. And we don't know where the ice is thinnest, and we have no clue when we're going to just crash through the ice into the freezing water. But at any moment now, we can have a Bank of England situation. Now, the Bank of England, ladies and gentlemen, Kevin and everybody here, I appreciate your support, Kevin, and to my super chat, thank you. The Bank of England had a Lehman Brothers moment. The UK had a Lehman Brothers moment. And that was the firm that went under and started the '08 financial collapse. It was allowed to go under. And then we learned about credit default swaps, and we learned about very risky derivatives, and we learned about AIG, and just very, very everything that took place in '08 was the result not only of risky behavior and a lack of wisdom, but it was a bubble that popped. It was a bubble that popped, and the global financial system almost completely collapsed. Now we have another situation. The UK is another Lehman scenario brewing. This is an interesting article. The same day Lehman Brothers, okay, so the bond crash. So let's just go really quickly. On Wednesday, the Bank of England, because it's very interesting, and nobody's really paying attention to it, ladies and gentlemen. Kevin, thank you again. Off-label, hello. Thank you again. Kevin Duder, thank you so much. Greatly, greatly appreciated, sir. Thank you, Kevin. Greatly, greatly appreciated. We are going to have a situation, Kevin and Off-Label Jesus and everybody here. Sai, hello. We're going to have a situation where it's only going to get worse. And Kevin, thank you so very much. I can't do these live streams without you and the super chat, so thank you so very much. On Wednesday, Kevin, thank you again. Greatly, greatly, greatly appreciated. I appreciate your generosity. On Wednesday, the Bank of England announced it would buy long-dated government bonds until mid-October without naming an upper limit due to market disruptions. The background to this is the considerable rise in yields on fixed interest bonds in recent days. Haven't we seen this movie before? Bond yields rose too quickly as the prices of bonds plummeted while interest rates went up. When interest rates go up, the bond yields, unfortunately, will go up too quickly. In this case, they went up too quickly. And you had pension funds, you had hundreds of billions, trillions of dollars in financial institutions that are managing trillions of dollars facing margin calls. I talked about margin calls all throughout the past year in the Stock Market Crash channel. Hit subscribe there, and H.A. Goodman's other channel. But if you look, let's talk about UK pensions got margin calls. So, Sean, thank you. Off-label, thank you so very much. Sean, thank you. In the UK, thank you, Sean. Kevin Duder, thank you again, Kevin. I appreciate the kind words and your support here. UK pensions got margin calls. Okay, big problem. UK pensions got margin calls. You don't want pension fund managers to get margin calls. You don't want that to take place. You do not want that to take place because, well, then what happens is they sell the stocks that you have in your pension fund. So to my viewers in the UK, God bless you. Your financial system and our financial system will probably experience the same thing very soon, probably within weeks or months, unfortunately. The UK economy, if the Bank of England had not gone in, because there was mismanagement by the Bank of England and the Fed the past 2 years, we can go into that, and by morally superior, apoplectic politicians, had they not stepped in, you would have had pensions evaporate and pension fund managers and corporations go bankrupt, and you would have had a ripple effect that would have probably tanked the entire global financial system. And I'm not joking about this. Is not hyperbole. UK pension funds got margin calls. Here's a simple model of a pension fund. You know you will need to pay out a bunch of money 30 years from now, so you buy some 30-year government bonds and hold them to maturity. When the bonds mature in 30 years, you have the money, which you give to the pensioner, and you're done. The model is obviously oversimplified, but it's a good start. Let me make 3 points about this model. First point, doing a pension fund this way is expensive. 30-year UK gilts government bonds paid about 2.5% interest this summer. When the bonds mature, okay, so hold on one second. If you want to have £100 in 30 years and bonds pay 2.5%, you'll need to put aside 48 now, which will grow at 2.5% over 30 years to £100. If you are a company or government, you might not be jazzed about putting aside almost half the money now to pay pension obligations in 30 years. What if you bought bonds? What if you bought some stocks instead? If stocks return 8% a year on average, that's terrible. Okay, so they'll much better. Or you could do some super safe gilts and riskier corporate bonds instead. Still, okay, so second, financial. So they're basically trying to explain what happened. Second, the financial stability point. Structurally, pensions are about the safest form of investing. Well, but they all almost went under. Most big investors in financial markets are to some degree or other structurally short-term in ways that make markets fragile. Banks borrow most of their money short-term from depositors from capital markets, and if there's a run on the bank, then the bank will need to dump assets to pay bank depositors. Mutual funds let their investors take money out every day, and if a lot of investors want out, then the funds will have to dump stocks to give them their money back. Hedge funds let investors take money out and also tend to borrow money from prime brokers. If their assets go down, then they will get margin calls from brokers and will have to sell assets to meet them. So there's actually a more simple explanation to all of this. Where was that article I was reading? My God! So anyway, the interest rates went up too quickly, causing the yields to go up too fast, causing margin calls. Okay, so here, this is actually a really good article where Kevin, thank you again. Okay, so this is actually a pretty good article. All right. So let's get to this one. As the computer freezes. So, was there a Lehman moment this week? So here you go. Okay, this is actually a pretty good article that explains it. I'm trying to do my best to explain it, but it's somewhat difficult to understand. It's not that difficult, but when asset values move in surprising ways, they can cause painfully unintended consequences. Pensions' use of margin to buy government bonds and liability-driven investments, or LDI strategies, expose them to margin calls as yields on UK bonds soared. Okay, so because they faced a margin call and they were utilizing debt to buy government bonds for these pensions, which is generally a safe, generally a not that volatile in terms of investing. They have it down. And it's not really a strategy that these pension funds view as risky. Okay, but in this economic environment, even things that have worked in the past are very risky. So pensions' use of margins to buy government bonds and liability-driven investing, or LDI strategies, exposed them to margin calls as yields in UK bonds soared. Once the yields went up too quickly, they had a choice. They didn't realize the yields would go up so quickly when they were borrowing the money to buy government bonds in the UK. And so they had one of two choices. They couldn't pay the margin debt, so they would have to sell the pensions. So they would if they didn't pay the margin debt, they would have to sell people's pensions. That's a big problem, okay? Or they would go under. So you have these pension funds that could either have gone bankrupt or be forced to actually sell the pensions of people who, have their life savings, their life's pension there. In a too big to fail moment, the Bank of England reversed course, buying long-term bonds to push the values higher. So the market was moving in a direction these pension funds could not stand. And in a too big to fail moment, the Bank of England reversed course, buying long-term bonds to push bond values higher, giving insurers and pension funds room to maneuver. When this type of event happens, something buckles or breaks. In 2008, an unwinding of a mortgage for everyone approach caused the collateralized debt obligation CDO market to implode, resulting in the collapse of Lehman Brothers, the fourth largest investment bank. Until Lehman's bankruptcy on September 15, 2008, there was a considerable debate surrounding whether the government should intervene to prop up companies at risk of going under. The aftershock caused by Lehman's demise put the debate to rest, ushering in the too-big-to-fail era. In short, governments decided it was better to intervene when things buckle than waiting for something to break. London, we have a problem. So they had to intervene. Had they not intervened, it would have been a huge issue. But see, again, they caused this problem themselves by shutting down economic activity, halting all economic activity for a year and a half to 2 years, or a year to 2 years in various waves of nonsensical, completely irrational laws, and then pumping trillions into economies, and then saying, oh, your economy can function now, and watching, just watching inflation rise all throughout 2021 in the UK and the US, doing nothing about it. And then tightening monetary policy, raising interest rates here in the UK, as we either enter or are in a recession. So in the US, we're in a recession. The UK is, I believe, in a recession or about to be in a recession. I believe they're in a recession right now. Germany is as well. London, we have a problem. So it makes no sense to raise interest rates, but that's what these central banks are doing. London, we have a problem. Something was buckling badly in the UK given the Bank of England's surprise decision to buy its long-term debt to drive down yields. Previously, it planned to sell bonds to lower rates like the Fed here in the United States, not buy them. The need to quickly reverse course was because of an investment strategy known as liability-driven investing, or LDI. This approach has won favor among insurers and pension managers because it's designed to lower the risk that liabilities too greatly exceed assets. LDI strategies do this differently, but most rely on government debt and leverage. Well, that's the problem. We also have a tremendous amount of leverage and debt in terms of within hedge funds who buy very risky derivatives contracts purchased on margin and debt. These derivatives contracts could implode the global economy. Okay. We are on thin ice, ladies and gentlemen. We're on thin ice. And it's like I don't think people realize that they're just focused on Trump. I mean, they don't even care. Sean, thank you again. Jeff Mann, thank you. Thank you, Jeff Mann, thank you. Thank you. Kevin, thank you again, sir. Jeff, man, I hope all is well. Love the emoji. Jeff, man, thank you. Sean, thank you. To my UK viewers, thank you so much. You're experiencing what we'll experience, unfortunately, soon, or we're experiencing what you're going to experience. We're all experiencing the same horrible thing. But LDI strategies do this differently. Most rely on government debt and leverage. As long as the markets behave normally, everything works as planned. Jeff, thank you again. Kevin, thank you as always. Thank you. However, when a black swan appears, things can go awry, which appears to have been the case this week. But this is like, if pension funds almost went under. Pension funds are not they're not like hedge funds with risky derivatives trades, like Archegos, the hedge fund that went under. There was a song in the 90s. It was a rap song. It was a song. It went like this, like, self-destruction. We're heading for self-destruction. Self-destruction. We're heading for self-destruction. Well, we are heading for self-destruction, and it's not the fault of Trump. Actually, had we listened to Trump, we wouldn't even be in this situation globally in terms of geopolitics or the economy. That's a fact. This is the second year. They were taking a victory lap in 2021. So spare me, this would have happened under Trump. No. He wouldn't have gone after oil and gas companies. He wouldn't have gone to battle with the oil and gas industry. We can go on forever, but let's just read this. He definitely would not have pushed to keep businesses closed for so long. Jeff, thank you so very, very much. He wanted to open up within months, like a month or two after he just acquiesced, which he shouldn't have done. And all you heard was, it's too soon. And then they kept pumping money into the economy, and then they raised interest rates after they pumped money, and the whole system's imploding now. These were liberal Democrats who happened to be economists trying to justify in an economic sense the absolutely maniacal policies of wonderful, morally superior liberal Democrats and bureaucrats and experts. We have the worst experts who've ever walked this planet, ladies and gentlemen. We have the most unintelligent intelligentsia that's ever existed. These people have ushered in an era of we are experiencing a 2008 moment. And I know that, like, it's difficult for me to get a grasp on what happened in England. The bond yields rose, which caused margin calls, and the pension funds needed a bailout, and they got the bailout. But they wouldn't have needed the bailout, and they wouldn't have needed to raise interest rates had they not shut down economic activity for a year and a half like maniacs like we did. Just because everyone is doing something stupid doesn't mean it's the right course of action. But again, like, liberal Democrats and wonderful, morally superior politicians run on groupthink. They follow the herd, and if it's over a cliff, then there you go. Jeff, I'm going to look into that. Thank you, Jeff. And so you have a situation where a margin call is a very bad thing. It's kind of like you owe money on a football game to the mob. And one way or another, they're going to collect. So it's like, wow, Credit Suisse, wow. Jeff, you're right about that. Okay, let's see. I was reading about that, and now there's more articles. Okay, so the Bank of England's decision caused gilt yields to tumble and a global asset rally on Wednesday. Okay, so but see, this was only momentary. So now let's look at Credit Suisse. What's happening? I mean, it's going to be real bad this week. Bad, real bad, unfortunately. CDS, credit default swaps. Gee, where have we heard that before? Wow. I'll do a segment on the stock market crash channel right after this segment on this debacle. As Credit Suisse's credit default swap spiked to near 2008 levels, rumors of Lehman-like collapse floated. Bank steps to allay concerns. Wow. Not good. Talks of trouble brewing at Swiss investment bank Credit Suisse gained ground over the weekend. With the Twitterati began to raise the specter. Why am I laughing at Twitterati? There's actually some pretty good. Twitter is the dystopian nightmare. Is cyber dystopian nightmare where no one should be. Like, I haven't had a Twitter account in 4 or 5 years. Azimuth, exactly. Gem of self-destruction. Head for self-destruction. What ails Credit Suisse? Credit Suisse has seen its fundamentals deteriorate rapidly. It's happening. It's happening. This is chilling. This is frightening. This is horrifying. Not Trump. It doesn't matter. God bless him. It doesn't matter what Trump says. His rhetoric. It doesn't matter. Democrats are completely not only oblivious to Armageddon, which is taking place in Europe and also within the financial markets, but they probably wouldn't care if we're going to have a 2008 moment, and they don't care. They're obsessed with doing a number of things. Cheating Bernie Sanders every 4 years, they're obsessed with. They're obsessed with Trump, investigating him even though he didn't commit crimes, and they're obsessed with focusing on Trump's rhetoric as the entire world collapses before their eyes. They don't care. It's unbelievable. Credit Suisse has seen its fundamentals deteriorate rapidly thanks to a combination of macroeconomic factors and company-specific malaise. The bank has been rocked by a string of scandals and mishaps that impact its financials, but you know what? With most notable being the situation that arose, and I wrote about this, the collapse of U.S. hedge fund Archegos. Ladies and gentlemen, I wrote about all of this in my October 8th, 2021 article in The Federalist. Okay? See, it is possible that the polls are tightening. Azimuth, yes. I wrote about this. Hedge funds, margin calls, any banks that are engaging in anything somewhat shady, there's a moment of truth. It's like the moment of truth. Like if you you're heading into the boxing match of your life, and all you've done is drink beer and partied, and, you didn't train, well, you're going to have an attitude adjustment. You're going to have a moment where you're going to realize you should have trained harder. You should have done things the right way. That's what's happening now. It's a 2008 moment. Bernie Madoff could have continued his racket had there not been an 2008 collapse. Okay, these people that get caught like Bernie Madoff, they could have continued for years. They could have continued for years, especially if there was, an economy that was booming for years. It's when things collapse that you find out who is engaging in shady activity. It's not when times are good, or let's say you've pumped $10 trillion into the economy. Okay, you've basically given degenerate gamblers, Wall Street, trillions in the house money the past couple of years because you tanked economic activity, because you're a bunch of imbeciles in these central banks and these politicians that, worship experts that only agree with them. Of course, the experts that show any dissenting opinion, they're, they've committed blasphemy and heresy, and that they're excommunicated and banished from polite society. We'd much rather have a complete financial crisis and collapse than have any rational debate, on any topic. And they're doing the same thing with climate, too. Any skeptic or any person that's like, wait, I have a lot of knowledge here, and there's people like that, too. You just, no, we can't listen to them. So, it's unbelievable, ladies and gentlemen. It is unbelievable. So the Swiss bank had then warned a significant impact after it exited positions with the fund. That's really interesting and actually pretty frightening in terms, because that was a year and a half ago. And that was a relatively, they only lost, they say only, I think it was like 10 billion along with other banks. But that's not what would bring them down. Additionally, the bank was fined by a Swiss court in June for the lax controls it has, which allowed one of its employees to help a Bulgarian. Oh, wow. So, in July, Credit Suisse said it reversed a loss of $1.9 billion in the second quarter from a profit of $250. Wow. As its investment bank business bled heavily. Wow. Okay, I didn't know this. As resuscitation measures, the company announced a change at the helm. All right, probably too little too late. Credit default swap spike. Uh-oh. This is what's happening. Dun 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 dun, and you're like the entire world is swimming away from the financial shark crisis and Trump's like on a rowboat saying, I told you this would happen, and now you're getting devoured by a shark. I'm going to row over there, back to Mar-a-Lago. Enjoy the shark. Enjoy the great white. Enjoy the financial crisis with the dorsal fin you created. Credit default swaps spike. Credit Suisse credit default swap, a derivative instrument that allows investors to swap their credit risk with another investor, surged on Friday, reflecting the market perception. It's going to tank. Everything's tanking. Because, the Bank of England and its pension, it's the catastrophe in pensions. That is not what's taking place here. You can't have a central bank bail out Credit Suisse. I mean, you could. You could. That would come through tax dollars. But you can't just you can't start buying bonds and then save Credit Suisse. So this is really bad. This is really bad. So so here you have Credit Suisse credit default swap, a derivative instrument that allows investors to swap let's look at Jeff is the man here. Deutsche Bank also. All right, so let's look at here. Jeff, you are the man. Kevin, you are the man. Thank you, sir. Everybody here, thank you. To my super chat, thank you so much. All right, so Jeff Man, thank you. Okay, so hold on. This never happened when they were loaning me money. Credit Suisse, Deutsche Bank. Wow, trading like a Lehman moment. But do you understand? Nobody cares about this. Wow. Wow. I had read a little bit of this, and I just, you know what? But I appreciate. I have amazing viewers on this channel. Jeff Porter, thank you. Richie, hello. Trading like a Lehman moment. Credit Suisse, Deutsche Bank suffers from distressed valuations. Credit Suisse and Deutsche Bank valuations have nosedived. Investors discuss the systemic risk to global economy. It's happening, people. It's happening. Nobody really seems to care. The only news today is Trump and Mitch McConnell, how Trump's a mean person. It was Trump, by the way. First of all, he didn't make the statement. I mean, it's like unbelievable. He didn't make the statement based on his wife's background. He didn't. He made the statement based on public record business deals. That's what he was making the statement on. Very possibly corrupt, shady business deals. It was Trump that sided with Asian American students against Harvard. It was the liberal Democrats who didn't, who sided against the Asian American students. More Asian Americans voted for Trump. We can go on forever. Democrats always project. Sean, enjoy your depression, people. Sean, hello in the UK. So it's like, this is really, really bad. And nobody really understands. They don't care. And honestly, unless it's like, unless they're spoon-fed the information like this is going to be bad for the global economy and we are going to tank as a global economy, unless they are told this, the majority of Americans actually really don't care. They care more about Trump's personality. Okay, so they care more about Trump's personality than actual, like a 2008 moment again. So, this is really bad. I'm actually reading something on my phone pertaining to Theresa King. How long until the U.S. feels the fallout of the UK debacle? Thanks for staying on top of this catastrophe. Theresa, I think this week. I'm not being facetious or. I mean, doom and gloom is not my style, even though I have the stock market crash playlist. I wouldn't say, like, I was very cautious to say that, it's going to happen. I don't predict when, but I'm probably this week, next week. I mean, within the next month, which is kind of hilarious, too, because you have Democrats. This is the worst possible time for a global financial collapse, but it's happening. It's happening. I think this week, Theresa King, I think this week or next week. I mean, if you're on Wall Street and you're buying and you're bullish, I don't know what you're consuming in terms of narcotics, but I mean, this is, and I've been saying this for a long time. You have yields skyrocketing. Because the bond prices are going down too quickly as interest rates go up too quickly. Joe, I am not on Twitter. I have not been on Twitter in 5 years now, going on 4 or 5 years now. About 4 years. 4 years. There is a parody account that I think's been suspended. So, Lisa, thank you. This is really bad. Really bad. So here, during the first week of October, the world economy continues to look bleak as energy and gas prices have reached record highs. I mean, let's just look really quickly. So hold on one second. Wow. Credit default swap spreads at 14-year highs. Wow. Look at that. Furthermore, credit default insurance CDS levels resemble the same CDS levels Lehman Brothers had just before the bank's bankruptcy. Wow. Where's AOC and where is Elizabeth Warren and where is Bernie Sanders? Nowhere to be found. Credit default swaps? I thought that was a thing of the past, like bell bottoms. And gummies. Remember gummies? Those little rubber bracelets in the 80s. It's all about wealth inequality. But what about the impending financial collapse that I've been telling you that Trump predicted? Trump! He's a menace to society. And if you say a derogatory word about Debbie Wasserman Schultz, even when if the ICBMs are flying above and all of the Wall Street billionaires and people that siphon money from the working class, when the economy collapses, I want you to remember something. Never before have I met somebody as nice and as wonderful as Debbie Wasserman Schultz and Hillary Clinton and the Democratic Party, who cheat me every 4 years as I pontificate about economic justice and watch the economy collapse while Democrats are in office. Okay? Sorry. I'm sorry. I'm so sorry. I shouldn't have done that. Faith, hello. Hi, Caroline, hello. Okay, so Credit Suisse analysts downgrading their own stock to Swiss sell rating. Uh-oh. Wow. I have to say the Bitcoin journalists are good journalists. Like the crypto journalists, they're actually really good journalists. I think Bitcoin's going to get to 10,000 or lower, but okay. JP Morgan banks cut hot water. Wow. Use generators as Russia. Oh my God. This is a couple weeks back. Look at that. Wow. My God. What YouTuber told you this, ladies and gentlemen? Oh, that's right, me. And the former president, Donald Trump. I told everyone this, ladies and gentlemen, October 8, 2021. I told everyone this. And Trump also predicted the following. Eric, my man. Yes, exactly. Exactly. Lisa, yes. The internet. I did get it fixed somewhat, yes. Trump lashes Germany over gas pipeline deal. Cause it you-know-who's captive. You're going to be royally you-know-what. Ha, stupid Trump. You don't know anything, Trump. Trump. Oh, Trump. He's such a buffoon. Oh, everybody. Oh, what's this? Invasion. Inflation. Interest rates going up and down like a yo-yo. Economic catastrophe. And oh, Trump was right. And gee, who messed with that wonderful pipeline? Oh, okay. This man is the orange Nostradamus. Trump is the orange. But again, see, you get no points for being right in America. It's only looking good. If you look good standing atop a heap of Bandini, that's fine. As long as you look good in the U.S. U.S. President Donald Trump launched a sharp public attack on Germany for supporting Baltic Sea gas. Wow. What did he say? I mean, the man is like an orange Nostradamus from the future coming back, literally predicting everything. And they're still like, did you see what he said about the McConnells? Like, he wasn't talking about the person's background. That's all you see. The fact is that they're the ones who only see, they will take anything Trump says. And see, also, Trump is wrong. This is the one thing. The man predicted all of this, and he wants to generate that. It's sometimes I don't know. I don't think that sometimes it's good, if he's direct and to the point, but making morally superior liberal Democrats feel morally superior will allow them to ignore an actual depression, economic depression, and ICBMs flying above. They won't care. They will not care. So it's counterproductive what he's doing. Coach Schnitzel. Exactly. So saying Berlin had become a captive to who, he criticized he's literally talking about the Baltic Sea, that whole thing that's now got holes poked in it. He literally talked about that in 2018. I mean, he's like, I predicted all of this and all I got was a Mar-a-Lago raid. he's like, I think they took my will. I don't know what's going on. What is wrong? What did Trump say wrong? Trump meeting with NATO before said it was very inappropriate that the U.S. was paying for European defense against you-know-who, while Germany, the biggest European economy, was supporting the gas deals with Moscow. What's wrong with what Trump said? It's exactly what a president should say. If Mashed Potato Brains Joe mumbled that and slurred, tried to communicate that through slurred speech, that would be fantastic. What did this man do wrong? That's exactly what you should do. Exactly what you should do. Oh, whatever. I mean, it's really exactly what what we should be doing. Taking them, instead of revering them here. Video surfaces of a horrified, as Trump tells him to work things out with, but that's exactly what should have taken place. There should have been negotiation. And then you get this, everyone seems to be focusing on his face, when all I could think about is where we'd be if that incompetent you-know-what was president now. There was an invasion during Biden's tenure. I don't understand I don't get it. They would rather sacrifice countries than admit Trump was right about anything. They would rather have Armageddon. We are on the brink of economic collapse. They're going to have the Fed is going to have to pump trillions back into the economy again. Inflation, it's going to be like 150. No, it's already $150 at the supermarket. It's going to be like $300 every time you go to the supermarket for just 3 or 4 days worth of food. I mean, it's just, all because of his personality. Just wear earplugs. Don't listen to him. Don't read the Washington Post and the New York Times that gets you all hysterical over Trump. The man predicted the stock market crash, so did I. The European conflict, Now we see Credit Suisse, Deutsche Bank, we see Bank of England bailing out UK pension funds. I mean, and we haven't even gotten to the market's going to crash and tank even further tomorrow. Okay? Because when you have all of these problems, ladies and gentlemen, you have all of these problems. It's unbelievable. It's just like, nice, Tammy, very awesome, very cool, awesome. Dow Jones, I mean, past 5 days, it went from, yeah, this is not good. From 32 to 28. How is... Oh my God. Huh. I mean, the market could go up tomorrow, but it'll probably have a catastrophic week. Or it could have a catastrophe tomorrow. I don't know. It's really just, it's something that I think Startled Mouse, he is. It's impossible to predict like what's going to happen in the market tomorrow. I just think that this week is going to be a catastrophe. I really do think this week's going to be a catastrophe. Futures follows bear market. Let's look at the Dow futures again. All right, ladies and gentlemen, thank you so very much. I'm not sure. I might have a segment later tonight. And so be here later tonight, or I might have an upload, but I will have a stock market crash channel segment on what's going on. I'll have an H.A. Goodman segment also. H.A. Goodman's other channel segment also. But hit subscribe. Thank you so very much. Scarlett, thank you. Everybody here, thank you so much. Kevin, Jeff, thank you. Kevin, thank you so much. To my super chat, thank you. Kevin Duder, thank you again. Everybody here, I should see you later tonight. I'm not sure if I'll have a live stream, but just check the channel in the next couple of hours. I'll have a very important short tomorrow. It's President Obama exonerating Trump, and it's his own words, and you'll see that. So definitely check that out. Ozzy, thank you. Everybody here, thanks so much. Caroline, thank you.